am Sikhulule Mabete, and I have the honor and privilege of serving Experian as their head of compliance for Africa. It is such a pleasure for me to be here today and to talk about a topic that is quite near and dear to my heart, but a topic that Experian really takes seriously, which is why it has been included as part of the agenda today. So, in a nutshell, my presentation is going to be around legislation and policy, as well as the impact that has had on our industry, our clients, and Experian as a whole. So I've got a few topics for us to unpack today, and I've taken a little bit of a different approach to your usual legal and compliance presentations, in that you won't really hear me make references to any sections or anything like that. So don't expect me to be reading to you any boring legal sections or trying to copy and paste anything from the law. This is really a conversation that's going to allow us to, one, understand the power of data, so contextualizing absolutely everything I'll be talking about today. Then I follow quite a simple approach to make sure that we can keep this presentation punchy, in that we're first going to look at what happened. So what is it that you need to know, especially when it comes to the scope of application of all laws which affect the business information part of the business, and of course, your processing of business information. So what happened? Secondly, we're going to move on to our so what. And that talks to our approach to compliance and how we as a business can empower you as our clients. We believe in collaboration and we believe in partnership. And that will be the basis of our so what conversation. Lastly, we're going to go with now what, right? And this talks to the call to action, right? Now that you have all of this information, now that you've given me 30 minutes of your time to talk to you today, what happens next? And in that section, we'll look at that. So just to recap the topics that we will be unpacking, we're going to contextualize this presentation by talking to the power of data and how Experian as a business is powered by data. Then we're going to look at what happened. So what? Why should you care? What does this mean for you? And lastly, now what? So going to dive right into our powered by data segment. And really as Experian, data is absolutely everything to us. We're proud of data. We're proud of the data that we host. But really what gets us excited is what we can do with the data to be able to build and facilitate a financially inclusive Africa. And, I don't know about you, but that really gets me excited and helps me wake up in the morning, because it means that every single day I get to do something that makes this a better place to live. And how we look at that is really based on the pillars that you see on the screen, which I will take you through quite quickly. Firstly, data or information is the lifeblood of Experian. Everything in our organization is based on data. So we take the security and the privacy of data extremely seriously. As everybody knows, we're a highly regulated organization, both from an NCA perspective, but also from a POPIA perspective. And because of that, we need to ensure that we respect not only the letter of the law, but the spirit of the law. And that leads me to the next thing, in that trust is paramount when it comes to data. And I will expand on this a little bit more. But the way that we see this is that, unless people can trust you, be it a customer or a consumer, be it a company that you wish to work with, if they do not trust that you're able to appropriately handle their data, you're going to find yourself into some issues. And as we understand that data is absolutely crucial in this day and age, right, it is absolutely paramount that you're able to establish that trust and you're able to ensure that people are willing to give you their information so that you can drive your business forward. Next, at Experian, we really don't see data privacy or how it is that we hold information as a barrier to success, but it's really a useful tool that can offer us, as well as each and every single one of you who are our partners and our clients, really a competitive advantage. Because like I said, when people trust you, you get more access to data, which allows you to develop greater insights, which then obviously further allows you to make data-driven decisions. And we think that looking at data and really privacy compliance from that perspective goes a really long way. And then lastly, to cap off how we see the organization being powered by data, is that we focus on what we'd like to call compliant innovation, right? So we go out of our way to ensure that this company continues to innovate, find new ways of helping our clients, but really we need to always ensure that we avoid any form of unintended consequences. Now, if you'll just entertain me for a second, I just want to wrap this up with a short little story of how it is data protection, privacy, and why all of these regulators and laws really go out of their way to make sure that we treat information with the utmost sensitivity and protect it as appropriate to the risk that is presented. Now, unintended consequences is the whole reason why it is that regulators are so strict, why it is that the laws are so strict, right? And that really goes back to the very establishment of this right to privacy, laws that govern the protection of personal information or personal data. And from this perspective, it actually came all the way back from World War II. So you can actually trace back the right to privacy to the UN's Declaration of Human Rights from 1948. And what basically happened was that during World War II, the bad guys, whoever you thought those were, what they would do is that when they would invade the town, rather than running around trying to find all of their enemies, they would go to the mayor's office. And in the mayor's office back in those days, they used to have a book similar to what we used to call the Yellow Pages. And in this book, you'd be able to tell, these are the residents of this town, this is where they stay, everything that you would need to know about them. So the town and the mayor had all the best intentions in keeping that register and that list. But when enemies came and invaded, they were able to use this list. And obviously that put the people at a disadvantage because they could then use this information, to round up their enemies and do whatever it is that they wanted to do. So if you take this and you fast forward to the year that we're living in now, right, 2024, unintended consequences that come from the use or the processing of information have basically shape-shifted or changed in how it is that they come across, in that now unintended consequences talk to things like, information which could be used for identity theft, information which could be used to commit fraud, and all of those kinds of things like that. So the reason why I tell you the story, one, because I have the knowledge in my head and I may as well, share it. There's no point in having such a story in your mind. But really, the most important thing about it is so that you can understand that is the approach that the regulators have taken. And if you zone into South Africa and the POP here, under our constitution, there is a right to privacy guaranteed under Section 14. There I go mentioning a section. But yes, in our Bill of Rights, the right to privacy is protected. And the POP here states in its preamble and in the objectives of the law that, the purpose of this law is to extend this right to privacy. So while the Constitution has a high level right to privacy, you got to look into the POP here and how it is that, this right is actually interpreted and how it is that you must treat information within your business. Like I said, I would really want to make sure that you get the most out of today's section. And this was really just to contextualize everything that I'll be talking about. And as a part of this, I really have three main goals for today. One, I'm going to help you understand the laws and how it is that they apply to our industry. The second one, I'm going to make sure that you get value for your time by ensuring that everything I share are things that are useful for everybody on the stage, for everybody who's here and watching this presentation today. And then thirdly, really just try to make this presentation a little bit more lighthearted than other legal presentations that you're used to. Really just making sure that, I pitch it at the right level to ensure that every single person who is in this room or online today is able to actually ensure that, they have got something from this. Time is a really valuable commodity, especially in this day and age where businesses are dynamic, and you've decided to invest your time with us today. And because of that, we're going to make sure that when you stand up today, you've got something or you've learned something from this presentation. Now, just to basically summarize how it is that we look at information, data are just summaries of thousands of stories. Tell a few of those stories to help make the data meaningful. And that is what Experian does. We're here to help you analyze, interpret, and gain insights to make sure that you can drive data-driven decision-making. Now, before I jump into the legal parts, I just thought that it would be really interesting and fascinating to share with you some insights from the latest Forrester report. And it really talks around consumer trust. And the great thing about this report is that when you understand how consumers view organizations and how they use their information, right, you're then able to make, once again, data-driven decisions in order to build this trust with the consumers, and which will obviously drive your business forward and provide you with a competitive advantage. Now, just picking out a few of these stats, which I thought were really interesting, 21% of consumers are unlikely to willingly to share their financial information when they are applying for credit. Now, think about that, right? That means that 21% of people don't want to share their information, regardless of whether or not they're applying for credit. Some will do it if they are forced to. But if you look at the next stat, despite having a reason to share this information, right, 35% of consumers are unlikely to share such information and will remain unlikely to do so, regardless of whether or not there is a reason. So what we're starting to see here is a pattern, is that, consumers, I don't want to say have a mistrust for organizations, but they are starting to become more and more conscious around the value of their data, but also the kind of consequences that it can bring for them. And for this reason, consumers have become really, 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 really suspicious and more conscious when it comes to sharing their information. Now, the third stat, and I'm not sharing this stat to pick at banks. I know that there's quite a few of you guys watching this presentation today, but while 35% of consumers trust their bank above all other companies, 47% of consumers are actually unsure or outright don't trust their bank. Now, the reason why I highlight this is that banks, by their nature, are the most trusted institutions. That's why bank buildings look the way they look. That's why people are willing to let them hold their money. They are trusted institutions, probably more than any other type of institution. And when you realize the fact that there is still such a level of mistrust, even when it comes to banks, I think that there is real opportunity here. Because if we can find a way to basically change the narrative and how consumers see how it is that we use their information, we could really be in business. And that is where Experian comes in, helping you to both interpret the letter as well as the spirit of the law in such a way that consumers can trust what it is that you do with their information. Now, jumping into the bulk of the presentation, we're going to talk to what happened. And this is when I'm going to talk to the laws and really the scope of application that has now changed how it is that we do business in the BI space. And, I know that our sales guys have had a lot of questions on this, which tells me that you guys in the audience today have a few questions as well. So I'm going to tell you a little bit more about this, but really that is the bulk of the section, right? What happened? Now, before I jump in and discuss personal information, what that is and the scope of application, I just really want to make sure that everybody understands how it is that the laws function together. Now, you'll remember earlier, I mentioned the fact that the right to privacy is a constitutional right, and the POPIA is an extension of this right. Now, because of that, when it comes to the processing of personal information, which I will delve into now, when it comes to the processing of personal information, the POPIA takes precedence, not the NCA, even though we are a registered credit bureau or any other law. The only time we look at a different law and not the POPIA when it comes to processing personal information is really simply where that other law provides for more protection. So in instances where the NCA, for example, will provide a consumer with more protection than the POPIA principles, then we apply the NCA. And that goes for every other type of legislation as well. So we first look at the POPIA and then the next kind of law. And when you understand or better understand the definition of personal information as I'll explain it now, it will all make sense. So quite simply, the Protection of Personal Information Act, or the POPIA, defines personal information as any information relating to an identifiable, natural, or juristic person. I've broken this definition up into 3 blocks so that we could better interpret it with everybody. The first thing about personal information is that it could be any information. And we did not read this in, we did not write this in here. That is what the law says, any information. And you need to interpret that exactly as that, which is why it is that the law gives a million examples under the definition and makes it quite clear that it is including these, but not limited to. So really any information could be considered personal information if it meets the requirements of the other 2 steps that I'm going to talk to. So that could be anything, right? That could be my ID number. That could be my CV. But it could also be company-related information, right? That could be company purchase history and those kinds of things like that. So any information. The second thing is that it must be relating to an identifiable or an identified, which basically means that this personal information, so this any information, you must be able to use it to pinpoint, single out, or to associate it with a specific individual or a specific company. And I've already given away the third requirement, is that personal information must relate to either a natural person like me and you, walking, breathing, or whatever the case may be, or a juristic person. right? So a company. This is really, really important because very few other laws globally have this kind of scope of application. What this basically means is that the POPIA now applies to not only an individual's personal information, so myself as a consumer, but to company information, right? And that's really, really important for everybody to remember. So now all of a sudden, the requirements under the POPIA become applicable to you, not only when you process an individual's information, but when you process company information as well, which basically to me means that you need to basically make sure that you observe the POPIA regardless of the information that you process. Guys, I cannot stress this enough because that is where a lot of companies are falling short, not understanding or not being able to interpret how these laws actually apply to company data. Next, I'm going to basically talk you through POPIA to basically help you understand how it is POPIA compliance functions, right? What does this mean for you? Yes, now I understand that personal information applies to my information as an individual, but also to company's information, meaning that, there are legal requirements that come with it. So we've basically extracted this for you guys and put it on a slide. And this to us sums up POPIA compliance in a nutshell. It's really a two-step process. And this is what we assist our clients with. When you deal with Experian, you can have the confidence and the trust that, one, we ensure that all of our products and services are compliant with not only the POPIA, but all laws that are relevant to it, be it the NCA, the FICA Act, the ECTA, and the likes. We ensure that there is such compliance. And when our clients want to access this data, we then also take steps to ensure that it's being accessed for a purpose or a reason that is allowable in the POPIA. Where the NCA is required, then we will look at the NCA. And where it is that the FICA is required, we'll look at that. Now, how this actually works is that when you have a look at step one on the left-hand side of the screen, the first thing you should always ask when you want to process any information, individual or company, is do you have a lawful basis for processing? And a lawful basis is basically a justification for processing, right? Because the POPIA as a general rule says don't process personal information unless you have a justification. And these are the justifications. Could be a contract. It could be based on a law or some other prescribed purpose within the NCA. Could be based on consent. I'm going to stick to those because those are the most common. But that is how the POPIA interplays or interchanges with other laws, right? The NCA on the one hand looks at the law. So when you're processing information based on the NCA, for example, you have a justification because it is based on law. And the POPIA recognizes that you may have to process information to meet your legal requirements, right? There are also other instances where this law that you're relying on requires consent. So again, let's look at the NCA, right? For you to be able to access an individual's information, who could be a director or whatever the case may be, for the most part, the NCA would require consent. Of course, the nuances change based on the purpose for the processing. But in those instances, then we have to apply that law and those requirements. Because remember, the POPIA only allows you to look at another law where it provides greater protection. So where there is a legal requirement, which also requires consent, then you need to tick both. You need to make sure that you have a purpose, but also there is consent for such a purpose. So that is step one, establishing a lawful basis. Moving over to step two, I'm not going to spend too much time on this because it gets quite technical. But then the POPIA then has principles that you need to be able to follow, right? And there's 8 of these principles. They are quite well established. And if you've attended any talk on POPIA, everybody always focuses on these. So I won't waste your time doing that. The crucial thing I want to point out here is all these principles basically center around one thing, accountability. And where it is that your organization as a responsible party, you are accountable to ensure that information is processed in line with applicable laws. So as a registered credit bureau, we are responsible for the information that we hold. Our take as Experian is that we own no data. We are custodians of consumer data and of business data. And we will only allow access to that information or provide access to that information when we are clear that such access will be in line with these laws. That is a requirement that has been placed on us as a bureau and as a responsible party, and we are accountable for ensuring that not only will these laws be accessed for an appropriate purpose, but it will be treated appropriately. Like we promise consumers, we will treat the information when we get the information. Next, I'm just going to run through some requirements for valid consent. And it builds from the last slide because consent is quite important. Consent can either be a standalone justification because the POPIA allows it to, if you remember step 1 in the slide before, but also sometimes consent is required as a part of a law, so it must tag onto something. So, for example, if you look at the NCA, there's quite a few provisions in the NCA that require consent, and in those instances, then you need to have that purpose and the consent. In the BI space, consent becomes quite critical, purely because the POPIA is what would govern most of this. As we know, the scope of application of the NCA is quite limited, right? $1 million a year or assets. So it is quite a limited scope. So in the BI space, understanding consent is what allows you to do certain things. And our requirements for consent are quite clear. I won't talk you through all of these because they're quite self-explanatory, and we will be making the presentation available. But just quickly, we have interpreted the POPIA requirements for consent and developed what we like to call the 5 C's for valid consent. Now, you'll see at the top, there is the definition of consent as per POPIA, and that says it must be any voluntary, specific, and informed expression of will in terms of which permission is given for processing. All this basically means is that it is legalese for saying that consent is permission. So if you want to process based on consent, get permission. And the 5 C's tell you what it is that makes the consent or the permission appropriate. The first one, you must collect the consent directly from a data subject. To me, this is logical, right? Because only I can allow you or give you consent to process my information. So you cannot get consent from, I don't know, some other company or anybody else. The only other time where we allow consent to stem from anywhere else or to be collected from anywhere else is where we're talking to minors, which is very rare, or people who have been declared by court unfit to be able to make such decisions. In those instances, you can collect consent elsewhere, but really consent must be collected directly from the data subject. The second one is that there must be a clearly communicated purpose. Now, this is quite clear, right? If you look at these first two, directly from me and a clearly communicated purpose, that tells you that one, it is voluntary because I willingly gave you the information, and it is specific because you clearly communicated what I'm giving consent to. Next, you must require a clear affirmative action. So somebody has to do something to give consent. You can't infer consent. You can't say you gave us consent if you don't opt out. It must be clear. So whether somebody clicks, signs a box, checks a box, signs a contract, a document, whatever the case may be, there must be clear affirmative action, positive conduct that person is giving consent. And when you look at this, it talks to the informed expression of will, right? Because now you're expressing your will, you're doing something to demonstrate. Next, consent must be unambiguous, and that talks to the informed part, right? If I read something, Suzette reads something, Heloise reads something, Stacy reads something, and we all interpret it differently, then that can't be informed. So the consent has got to be clear, which means that you shouldn't just put a whole bunch of stuff in your consent clause because you're actually moving away from this. And then lastly, and this is not a part of the definition, but it is clear from the accountability requirement and lawful basis, is that you must capture consent for future demonstration. As we know, in a compliance perspective, if you can't prove something, if you can't demonstrate it, it basically didn't happen. So you must be able to capture the consent and prove it. Whether you're being audited by a vendor or another client, the regulator, whatever the case may be. If you can't show the consent, it's almost as if it didn't happen. Now, the last slide I'm going to talk to is once again demonstrating how the POPIA, or the protection of personal information, plays with other pieces of legislation. And I thought, because quite a few of our clients are in financial services, the FICA would be a good example. So what we would do is that we would start at the top and we would say, are we processing personal information, right? And now we understand what personal information is. It's information that can be used to single out or pinpoint an individual, specific individual, or a specific company. So if we tick yes on that box, we now understand that, POPIA is applicable. Of course, there are exceptions, but POPIA is applicable, right? Now, that's really, 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 really crucial, because that now means that the BI space has actually now been legislated. And this is a really, really good example, right? So now all of a sudden, there's all these requirements for processing information. We look at step one, as per the last slide. Step one, do we have a lawful basis? If you are processing information as per FICA and the obligations in FICA, maybe you are doing due diligence or whatever the case may be, right? In that instance, Then the POPIA allows you to process that information only if you ensure that you follow the safeguards placed by FICA. And when FICA doesn't have safeguards, then you have to refer back to the POPIA. So there's like a little bit of an interplay or a tension between the laws. But when you actually, look at it properly, there isn't much tension. They actually flow together quite perfectly. Why this is important is that, if you're a dealer in high value goods, as the FICA puts it, selling something for more than 100,000 Rand, all of a sudden there are certain obligations on you which require you to process personal information, and the POPIA allows you to do so. Right? The FICA now applies to all credit providers. So if you're sitting here, chances are you're in the credit space and you're a credit provider, so the FICA would apply to you. In that instance, right, you would need to say, do I have a lawful basis? Yes, I do. It is a law, and in this case, it is the FICA, and you would need to follow those requirements. Where it is that a lot of people fall short is that they misinterpret what that means, right? If you're doing due diligence as required by FICA, then you take a risk-based approach and you're able to process information to meet those legal obligations. But what you then cannot do is take that information and use it for a million other things, or process more information than what you would need to meet your risk-based approach, as FICA basically explains it. Now, this was really just an explanation to understand how these two laws work. But the most important thing that I want you to be aware of is the BI space is no longer a free rein. It's no longer a free-for-all. Juristic person's information, company information, is now something that is legislated. And I know what everybody's thinking, right? No, but this information is public. I could get it from CIPC. My rebuttal to that is that you could get my cell phone number from Facebook. Does that mean that you're allowed to send me direct marketing messages? No, it doesn't. And that is one of the misconceptions everybody has for POPIA, right? In that these laws will not be applicable to information that's in the public domain. That's not true. The law still governs how it is that you can and cannot use that information. And that's really crucial to remember, and is something that we really try our best to ensure that our clients understand. Now, I have said a whole lot. And what does this all mean, right? What does this mean to you? Now, at Experian, we think it's really important that each of one of our clients understand our product development journey. And it's something that I'm a lawyer, so I'm not as creative as most people, but something that we have termed built-in compliance. And we basically go through a 4-step process when developing our products. The first step is compliance by design. Way before a product is actually built, we look at all the implications from a compliance and especially a regulatory compliance perspective to ensure that we can bake compliance into all of the different products, right? And ensuring that our values are not only espoused, but are entrenched in that product, right? And that is ensuring that we respect the spirit and the letter of the law. Once we understand that there is a product idea while it's in ideation phase, we would usually put together a multidisciplinary team where myself or one of the people in my team would go ahead and sit on this committee and give all the advice required, do the compliance assessments and all of those things to make sure that the product will be compliant with the law when it is built, right? So compliance by design, we bake compliance into our products and services. The second one is basically all of the various assessments that we do. We put our products through a stringent and a huge amount of assessments. We have something called a records of compliance, which looks at the broader legal or regulatory universe. We do data mapping so that we understand where are we getting the information, who's using it, where is this information going, how long are we storing it? And then we do something called a personal information impact assessment to determine what could be the possible unintended consequences of this. And all of this is supported through the best-in-class information security, as well as compliance or GRC management technologies. Step 3, we always like to collaborate with our clients. I am probably, and my team together on that, we're probably the only compliance people who have at least one client meeting a day. And that's quite clear on why we do that, right? We want to collaborate. We want to ensure that you understand why we're doing what we're doing, how this can benefit you, but more importantly, how you can take this and use it as a competitive advantage. And further to this, right, we do not develop products for Experian or for the market. We develop products for our clients. We develop things that people want. So within those sessions, you can make suggestions and everything else. We will take that in. Client collaboration is crucial for us. And then step 4 is, of course, continuous support and improvements. Like I said, it is crucial for us that we're always there for our clients, whether it's myself from a regulatory compliance perspective, one of our technical guys to ensure that there's technical support where required, or even one of our sales or products people to ensure that you can get the best value out of the money that you spend. Now, I don't want to spend too much time on the slide, but it's really just to give you a flavor of, now that you understand the laws and how they apply in the BI space as well, now that you understand that we have to be a little bit more careful, this is how we as Experian have approached it. And this is how we empower you, right? That when you come into Experian and you do business with us, you know that the products that you are using are compliant. And if you basically stick to the use cases as agreed, then you can actually, proudly smack yourself on the chest if you must and say that you respect not only the spirit, but the letter of the law, and you're on your way to building consumer trust, right? And for us, that is the only way that this data gain is sustainable, ensuring that we have a clear chain and ensuring that consumers understand and we're transparent as to how it is that we process information. Just quickly, this is what would go into everything that we do for data protection. I'm not going to spend too much time on the slide because it is quite a technical slide, but I wanted to ensure that everybody here today has it. And when Stacey and the marketing team share these presentations, you'll be able to have a look at this. There's references within the presentation, and we truly hope that it will help you. But really, our data protection or PAPIA program within South Africa is structured on 4 pillars: governance and accountability, right? Governance is absolutely crucial, but even more than that, roles, responsibilities must be clear. The tone from the top is non-negotiable. Every single executive must adhere to privacy principles and must set the example. The second one is security and privacy by design. As I mentioned, everything that we do, we bake security and privacy into all that we do. Training and awareness, right? This is probably something that we focus on, I would say, about 20% of our time. And I know that that is a lot considering everything that we have to do. But it is so crucial for us that, we don't sit in the background drafting all these policies and procedures and expecting people to understand, right? We train each and every single one of our staff members. So when you are talking to one of our sales staff, you can understand that that person has gone through annual staff training. They've gone through role-based training for their actual area, right? They understand everything about the product and the compliance implications of it. And we really, really take pride in that because it not only helps us and our clients, but it goes a long way into making it easier for you to understand the use cases of our product and basically the lines that have been drawn that within which you would be able to color as you take this data and these insights and you drive your business forward. And then lastly, data subjects' rights. It is absolutely crucial that we respect people's rights. The PAPIA has a bunch of rights that are within them, but most laws actually provide certain rights to data subjects, and we go out of our way to make sure that we're transparent in how we do this. So if you ever want to know what information Experian has on you, contact our information office, and you will 100% get absolutely everything that you need. So data subjects' rights are important to us, and this is something that we think everybody should be cognizant of because this is actually where most of the issues come in. But really, what now? The first thing I want you to take from this presentation is that transparency builds trust, right? Respecting the law builds trust, and we as Experian are going to be your partner, trusted partner when it comes to information and data services, because as you've seen, we really take this seriously. The second thing is that we've also developed a trust center, which basically gives you all the information you would need to know about how we process consumer as well as business information. And I do invite you to log on to experian.co.za and go through that trust center, empower yourself, understand what it is that we do with information and how that can help you. Thank you for your time.
and welcome to Experian's BI Forum. We're so glad you can join us today. My name's Karen Wust, and I'm the Business Information Product Manager at Experian. Today, I'm going to be talking to you about the value of our research reports and the importance they still play in managing credit risk. I think we can all agree that in today's fast-paced business landscape, credit risk has become more challenging. As a credit community, there's a focus on how you can leverage technology for more accurate credit risk assessments and how you can incorporate faster customer onboarding. But this should not compromise your credit risk. In a highly competitive lending industry, you need to implement a seamless KYC process while keeping the balance of a frictionless customer experience. Then, once you've onboarded those clients, how do you keep track of the changes in their businesses? By keeping your finger on the pulse of these changes, this will allow you to proactively manage your book so you don't have a high default rate, which can affect the profitability and stability of your business. Putting in these measures, you will be doing your best to prevent any of your accounts going into an accounts receivable status. We have a solution for each customer lifecycle stage. If you haven't yet heard of our new digital onboarding, please reach out to us after today's event, and we'll be happy to set up a meeting to take you through this solution. Today, we're going to focus on our research reports and how they can be used in onboarding and annual reviews of your customers that you can implement as part of your credit policy. This is to ensure that you're assessing your credit risk appropriately for the different exposure levels and also making sure you do the necessary regulatory compliance checks. Business credit reports were among the initial services offered by credit bureaus. They play a crucial role in evaluating the financial health of customers, partners, and vendors before extending credit. These reports provide a comprehensive overview of a company's credit history, allowing any potential partners and lenders to determine their creditworthiness. By obtaining these credit reports, you can evaluate the company's financial stability ahead of entering into any credit agreements. For business owners, maintaining a strong credit report can facilitate better loan terms with suppliers, ultimately creating new business opportunities and allowing you to focus on growing your business. Experian has access to a vast amount of data. And while we utilize various sources to keep this information up to date, it is still essential to conduct interviews with business owners to gather direct insights. Unlike regions such as the UK, where private companies' financials are published through the Companies House, we face certain limitations. The information we collect can be utilized to calculate a risk grade, allowing you to assess whether a business is high risk, average risk, or low risk. Our research reports can effectively enhance your KYC process by confirming a business's identity, identifying its customers, and detecting any suspicious activities. My colleague Chad will be leading a session on the fraud checklist we have implemented as part of our research process. If you're unable to attend his session today, we are recording and it will be shared with you after today's event. So let's discuss the data we maintain and continuously update. Our database contains approximately 9.1 million entities, of which about 3.8 million are active. These include private and public companies, closed corporations, trusts, sole proprietors, and partnerships. We enhance the business information by integrating data from our Consumer Bureau, which provides details such as judgments, ID verifications, and links to other businesses. Every night, we receive files from CIPC that include new company registrations, changes in company status, business name changes, director changes, auditor information, and shareholder details. We obtain judgments, rescission orders, and sale and transfer information from the courts, which is added daily. Experian is dedicated to expanding our collection of trade payment data. Unlike consumer data, where it's regulated by the NCR for the various credit providers to submit to the bureaus, business payment data does not have the same requirements. The benefits of submitting your aging through to us is an excellent collection strategy. If your customers are not paying you well and you report this to us, it's going to affect their score negatively. And if they are paying well, this is going to contribute to building up a positive risk grade for your good payers. The payment information we gather is linked to a business's credit report and is aggregated. So we don't show the names of the suppliers. We'll give you a count to show how many suppliers we collected data from and the aging in the various aging buckets. And then based on the terms provided, we're going to calculate how much is overdue, or you can send us your overdue and we'll use that in the import process. This information is highly predictive and carries a significant weight in our scorecards. So while public data can be useful for certain applications for low exposure amounts, research data offers deeper insights into a business's operations and financial health. We offer a range of reports tailored for the different credit limit requests. So let's review some of these existing reports, and if none of them meet your requirements, please also do come chat to us. Our bronze report is the most basic option available, and it's ideal for your high volume, low exposure customers. This report includes a phone call to the business to verify key header information such as the business name, registration details, address, and contact details. We'll also update 3 references to assess how they're paying their other suppliers, and if they bank with an institution that still provides codes, that will also be included. Our bronze reports can be delivered within 1 to 2 days and will feature some online information including enhanced director data, which includes the ID verification, judgments, and links to other businesses. This report will also provide you with a risk grade score. Our silver report is regarded as our core report, and it's our most popular researched report. Silver reports are recommended for credit limits up to 500,000. It includes all the features of the bronze report and expands with additional details such as company structure, operations, business history, import-export, BE status, staff and fleet counts, company premises, and lease agreements. Financial information including payroll dates and both previous and current turnover is also included. We'll update 3 to 4 trade references, and when available, we will return the ledger information covering up to 2 years' history. Additionally, the report contains an assessment summary that comments on the requested credit limit and terms. If you want to boost from the silver report, then the gold report is what you're going to request. The gold reports are recommended for limits over 500,000 up to 2 million. It contains the silver report details with the addition of property and bond information on both the business and the directors. We'll then request the latest annual financial statements, and we'll comment on the profitability, liquidity, and solvency of the business. We'll inquire about existing contracts and the payment performance of those suppliers. And when we have enough information in the industry, we'll do a benchmarking comparison to show how the data subject is comparing to other businesses in the same industry. Our Platinum report is our most extensive report, and for that max boost for applications over 2 million, this is the report that you'll need. The Platinum report is ideally positioned to form part of an existing credit management process and can be customized according to your requirements. These reports can be ordered for your significant exposure values and can also be requested for instances of mergers and acquisitions, joint ventures, and procurement purposes. The Platinum report can include an on-site visit if required, so we can do a face-to-face interview. We have a specialized team that does our Platinum reports, but we are able to scale by leveraging on our wider research team if needed. Over and above the information you receive in a gold, the Platinum will also include confirmation of compliance with industry regulations and confirmation of good standing with SARS, any competition commission matters, corporate governance compliance, media and press related articles, and a SWOT analysis. Our standard platinum reports are delivered within 4 to 6 weeks, but we can arrange express where we can make it available within a week. We also have a hybrid platinum, so that is where you would have the silver base report with a more extensive platinum assessment. And then if you've got any customers outside of South Africa, we'll do our international hybrid. We will get the international report with the assessment being done by the platinum team. And then finally, we have the financial foresight report. So this provides a comprehensive financial assessment. We look at the financials for the past 5 years, and in these reports, we do a financial sensitivity analysis. This is to predict any impact of changes in key variables of a company's financial performance. It involves analyzing how different scenarios or changes in assumptions can affect the financial outcomes, such as revenues, costs, profitability, and cash flows. So all of the above reports can be ordered via our API or from the Business IQ application. If you're reviewing an existing report and you click on Request Report, it's going to pre-populate with the existing information. You'll then select the report type and the speed and any special instructions to our research team. So let me take you through the investigative process. So when we're updating a business profile, there are certain questions that we ask in order to help us better understand and assess that business. The first question is the business a natural or juristic entity? And if their turnover is less than or more than $1 million. If the business's turnover is less than $1 million, then they'll be subject to the same regulations under the NTA that a consumer is. Then we ask if the business has had any previous names. We do this to check to see if they have any judgments linked to those previous names. Some business owners change the name of a business in an attempt to hide from judgments. We do track this in our history that we've built up over the years, so even if it's not disclosed, we're able to link it on our historical data. Other business names are also important, so sometimes companies may have registered a shelf entity and they're trading as their trading name is the name that you know them by. So we'll get any trading names, alternate names that will be included in the credit application. And then knowing when the business was started is a good stability indicator. It's used in our scorecard, so looking at the age of the business. So companies that have been doing business for less than a year are considered startups, and this can be a high risk. Businesses that have been trading for 1 to 3 years have begun to find their footing, but still face a high failure rate. Between 3 and 5 years are generally seen as more stable. 5 and 10 is regarded as relatively stable, and companies that have been in business for more than 10 years are viewed as stable and reliable. Entity type helps us understand the business's tax obligations. All registered companies are subject to corporate income tax. Sole props and partnerships are taxed through their personal income tax, and then small businesses will, with a turnover of less than $1 million, have a more simplified tax compliance, and they can also apply for various tax relief measures. We'll validate the VAT number provided to us with SARS. And then BE ratings, these are important in promoting economic inclusivity and driving socio-economic development. We'll obtain the BE level as well as the breakdown of the ownership and the management. By knowing who the auditors are, if we pick up anything in the financials that aren't making sense, we can reach out to them and verify the information. If the business uses any of the big 4 auditing firms, it can also indicate the business size and that the financial reporting is done following international standards. Knowing the amount of staff that is employed by the company can provide insight to credit grantors on the financial stability of the business. The higher the number of employees, it may indicate a more stable and growing business. It can also be used as a metric for understanding the volume for a certain need of products. So for example, if a business is applying for 50 mobile devices, but they only apply employ 5 and it's for their staff, this can be seen as a fraudulent credit application. When it comes to vehicle fleets, this can also indicate stability and the ability to provide services. So from a procurement point of view, if a business is offering transportation service, it will be important to know that they have those vehicles to deliver the service. Importing and exporting activities allow businesses to tap into markets outside of their domestic territory, which can lead to increased sales and customer bases. Ultimate beneficial ownership. So behind every business is a registered principal or principals. So we do get shareholding information from CIPC, and if we have received it, it will be returned in the reports. We also do ask this as part of the research and investigative process. In certain registrations that we've received from CIPC, we'll see that we have companies or trusts listed as the principals. So you have to do a bit further investigation to identify the person that's benefiting from the business's profits. Identifying UBOs promotes transparency in financial systems and helps prevent illicit activities. CIPC is collecting these registers, but haven't yet made them available to third parties. We will return the information we've received in the principles of the business, and then we also ask who's the ultimate holding company, who's the holding company, and if they have any shareholding in other businesses. So if it's more than 50%, it would be a subsidiary, and anything between 30 and 50% would be an associate company. So we do ask for the annual financial statements, and when they are provided, we'll incorporate this into our assessment and scores. We do collect payment information during the research process, but we also do updated trade references. So these are trade references that they've filled on the credit application, as well as we'll check our historical database and make sure that we call any suppliers that have previously reported bad payment behavior. All these data variables together with the existing data will be used to calculate the risk grade. The risk grade will assist you in summarizing all the data elements. So if you see that it's high risk, you can go to a certain part of the report to see what is causing that. And if you're unable to see, you can also reach out to us and we can explain the different scores. So I hope that I've highlighted the importance of all the different data elements and the importance for it to be obtained from the source. As data is added and new information is received, the scores are dynamic. So if we were to do a report today and we find that the supplier is not paying well, it will impact their score when we finish the report. And there are different types of reports. So we did give you some guidelines on the credit limits, but you can also do it as per your credit policy. And then I know we've got some business owners on the call today as well. So I think one of the biggest challenges is accessing finance, and you need this in order to grow your business. So Experian holds both positive and negative information. You can avoid negative data being reported by paying your suppliers on their agreed terms. And then if you do want to see the information on your business, you can reach out to us. So you can email businessinfo@experian.com. We'll be able to send you a questionnaire, which you can update and send through, and we'll update it on your business. So that brings me to the end of today's presentation. I hope you now understand how our research reports can assist with your credit decisioning, and that we offer different types of reports depending on the credit limit you're assessing. Enjoy the rest of the forum, and we look forward to chatting to you again soon. Thank you. Bye-bye.